The economic implications of Trump's tariff retreat, a financial perspective. Hello everyone, and welcome back to our channel. Today, we're diving into a critical development that's making waves across global financial markets. President Donald Trump's recent decision to pause the imposition of new tariffs for 90 days. But what does this mean for the U.S. economy, the global market, and most importantly, for investors? Let's break it down. For the past few years, the Trump administration has placed increasing tariffs on goods imported from countries like China, Canada, and the European Union. This was part of a broader economic strategy aimed at reducing the trade deficit and protecting U.S. industries from foreign competition. The tariffs, however, have caused a ripple effect throughout the economy, triggering higher consumer prices, disrupted supply chains, and, notably, volatile stock and bond markets. The decision to pause tariffs. What happened? In a surprising move, President Trump announced that the United States would delay any new tariff impositions for 90 days. This shift comes after mounting concerns from Wall Street and other sectors about the economic repercussions of a prolonged trade war. The stock market, which had seen sharp declines due to uncertainty over the tariffs, experienced a significant rally following this announcement. But this move also raised many questions. Why did Trump make this decision now? Was this a calculated economic maneuver, or was it a reaction to external pressures? Almost immediately, the financial markets responded positively. The S&P 500, a key index for U.S. stocks, surged by 9.5%, signaling investor optimism that a potential economic slowdown had been avoided. However, the bond market, which is often seen as a barometer for long-term economic health, had a different reaction. Treasury yields, which had been dropping, began to rise, signaling investor concern about inflation and future interest rate hikes. Let's take a step back for a moment and examine the broader implications of these tariff policies. On one hand, tariffs were introduced with the aim of supporting domestic industries. By making foreign products more expensive, the hope was that U.S. manufacturers would be able to thrive without the pressure of cheaper imports. However, on the other hand, tariffs also led to higher costs for consumers and businesses alike. Companies relying on imported materials saw their operating costs rise, which often led to higher prices for everyday goods. The trade war with China, in particular, disrupted global supply chains and created uncertainties for industries dependent on international trade. The tariff policy has been a hot topic in U.S. politics. Within Trump's own party, some members have praised the tariffs as a necessary move to restore the balance of trade and protect American workers. However, many Democrats and even some Republicans have criticized the policy, arguing that it has done more harm than good. Tariffs, they say, have not only hurt American consumers, but have also led to tensions with key trading partners. This recent move to delay further tariffs may be an acknowledgement of the policy's limitations, or it could be part of a broader negotiation strategy to pressure China and other nations into more favorable trade agreements. The impact on U.S. consumers and businesses. What about the average American consumer? The trade war and tariffs have had a direct impact on the cost of living. From electronics to clothing, the prices of many products have increased as a result of the tariffs. Moreover, businesses that rely on imported goods have faced higher input costs. While some businesses absorb these costs, others pass them on to the consumers, leading to inflation in certain sectors. The global impact. What does this mean for international trade? While the focus is on the U.S. economy, the implications of this decision are far-reaching. The global economy, which is more interconnected than ever, relies on free trade and predictable policies. The U.S. is one of the largest economies in the world, and any shifts in its trade policy have ripple effects across borders. For countries like China, the European Union, and Canada, the decision to pause tariffs means a temporary reprieve. However, this doesn't mean that the underlying issues in trade have been resolved. Inflation and interest rates. The long-term effects. In the long term, however, there's concern that the economic uncertainty caused by tariffs may push inflation rates higher. As consumer prices rise due to the cost of imported goods, the Federal Reserve may be forced to increase interest rates to control inflation. Higher interest rates, while helping curb inflation, could also slow down economic growth by making borrowing more expensive. This could lead to a balancing act for policymakers, who must navigate the fine line between controlling inflation and promoting growth. Conclusion: the road ahead for U.S. trade and global markets. In conclusion, President Trump's decision to pose new tariffs is a significant move in the ongoing saga of U.S. trade policy. While the immediate impact on the stock market is positive, the long-term consequences remain uncertain. The question moving forward is whether this pause will lead to a more stable trade policy or whether the U.S. will return to a more aggressive stance on tariffs in the future. What's clear, however, is that the global market is closely watching the U.S. for any signs of policy shifts that could shape the future of international trade. Let us know in the comments what you think about Trump's tariff retreat. Will it lead to a better trade deal, or is it just a temporary solution? We'd love to hear your thoughts.